Hello everyone, my topic is amalgamation in the nature of purchase. Contents: amalgamation in the nature of purchase and examples. What is amalgamation? When two or more companies or existing companies combine together to form a new company, it is known as amalgamation. All the combining companies are liquidated. A new company is floated to take over their business. The amalgamation is of two types, namely in the nature of merger and also in the nature of purchase. My topic is in the nature of purchase. Amalgamation in the nature of purchase. Amalgamations, which are in effect a mode by which one company acquires another company. As a consequence, the shareholders of the company which is acquired normally do not continue to have a proportionate share in the equity of combined company. The business of the company which is acquired is not intended to be continued. Such amalgamations are known as amalgamation in the nature of purchase. The following are about amalgamation in the nature of purchase. It includes the following items. All the assets and liabilities of the selling company may not be taken over. Less than 90% of the selling company shareholders may become shareholders in the purchasing company. The consideration payable to shareholders of selling company may be in the form of shares or cash or in any other agreed form. Selling company's business may or may not be carried on in future. The assets and liabilities taken over by purchasing company may be shown at values other than the book values at the discretion of the purchasing company. The next one is the calculation of purchase consideration. Purchase consideration can be calculated in four different ways, namely lump sum method, net assets method, net payments method, and intrinsic value method. These methods can be used for calculation of purchase consideration. Features of amalgamation in the nature of purchase. In the books of transferee company, the assets and liabilities taken over from transferor company should be incorporated either at their existing carrying amounts or alternatively. The consideration should be allocated to individual identifiable assets and liabilities on the basis of their fair values on the date of amalgamation. The transferor company's reserves, whether capital or revenue or arising on revaluation other than statutory reserves, should not be recorded in the transferee's company books. However, statutory reserves in the transferor company's books, if they should be continued for some specific future period, should be recorded in the transferee company's books. The corresponding debit should be to amalgamation adjustment account. When the continuance of the reserve is not required, a reserve entry can be passed to close the reserve as well as amalgamation adjustment account. Till such time, the amalgamation adjustment account is shown on the asset side of balance sheet under the heading miscellaneous expenditure. The purchase consideration paid by the transferee company has to be shown at agreed values of the shares or debentures issued, showing face value, premium, and discount on issue separately. If the purchase consideration agreed to be paid exceeds the net assets taken over, the excess amount should be debited to goodwill account. If the amount of consideration is less than the value of the net assets acquired, the difference should be treated as capital reserve. The goodwill arising on amalgamation should be written off to the profit and loss account in a systematic manner over its useful life. Normally, the period to write off the goodwill should not exceed 5 years unless a longer period can be justified. Here's an example for amalgamation in the nature of purchase. Here's the balance sheet of P and Q which is being amalgamated. The liabilities include the share capital of 4 lakh and 1 lakh 50,000, general reserves of 1 lakh 80,000 and 15,000, profit and loss account of 60,000 and 23,000, and creditors of 1 lakh 4,500 and 24,500. The total of assets of P Limited is 7,44,500 and of Q Limited is 2,12,500. The asset side of P and Q Limited includes the following: fixed assets of rupees 3,30,000 and 1 lakh. Investment face value of rupees 80,000. Investment of P Limited is 72,000. Stock of rupees 1,60,000 and 40,500, debtors of rupees 93,500 and 50,000, cash of rupees 89,000 and 22,000. total of assets of P Limited is 7,44,500 and of Q Limited is 2,12,500. Goodwill may be taken at 4 years purchase of average super profit of 3 years from trading on basis of 10% normal trading profit on closing capital invested. B Limited is formed for the purpose of amalgamation of both companies. Prepare balance sheet. Here's the solution to the given problem. Let's start by calculating the net worth of the business. The net worth can be calculated by deducting the liabilities from the assets. Here the assets, the total assets of P Limited and Q Limited are taken and creditors are taken as liabilities and deducted from the assets. The net worth of P Limited is 6,40,000 and of Q Limited is 1,88,000. The next is the calculation of goodwill. Goodwill can be calculated. Here super profit method is used to calculate the goodwill. So in order to determine the super profit, the average profit is calculated. The average profit is the profit of 3 years divided by 3. And the normal profit is the capital employed into normal rate of return. The super profit is determined by deducting the normal profit from the average profit. Here the average profit of P Limited is 1,10,500 and of Q Limited is 33,300. The normal profit of P Limited is 64,000 and of Q Limited is 18,800 and the super profit of P Limited is 46,500 and of Q Limited is 14,500. The goodwill can be calculated by multiplying the super profit into number of years of purchase. So the goodwill of P Limited is 1,86,000 and Q Limited is 58,000 rupees. The next is calculation of purchase consideration. The purchase consideration can be calculated by adding the net worth and goodwill. The net worth of P Limited is 6,40,000 and goodwill is 1,86,000. Hence, the purchase consideration of P Limited is 8,26,000 rupees. The net worth of Q Limited is 1,88,000 and goodwill is 58,000. So, purchase consideration of Q Limited is 2,46,000 rupees. The next is the balance sheet of B Limited. The liabilities and assets are as follows. Liability: equity share capital 10,72,000. It includes the purchase consideration of P Limited and Q Limited. The creditors is 1,29,000 rupees. So the total of assets is 12,00,000. The assets of B Limited includes fixed assets of rupees 4,30,000. It includes both P and Q Limited. Investment of rupees 72,000. Stock of rupees 2,500,000 of both P and Q Limited, debtors of rupees 1,43,500 of P and Q Limited, cash of rupees 1,11,000 of P and Q Limited, and goodwill of rupees 2,44,000, which is calculated in the previous slide. So the total of assets is 12,00,000 rupees. Thank you all for listening my presentation. Thank you.